We are live, we may start.
Sure. Hi, everybody. This is Rafiq Dabra, Senior Manager, HDFC Securities, and I welcome you to the exclusive webinar on strategic leverage margin trading facility by HDFC Sky. So now I shall start my presentation. So, what is MTF basically? So, if you are an equity investor, you invest heavily in equities. So, let's say someday you decide to invest 1 lakh rupees. But what if I tell you that you can invest up to 4 lakhs with the same capital? So, this can be done with the help of margin trading facility. So, for example, if you already have 1 lakh rupees, so HDFC Sky will lend you 3 lakh rupees and your total investment will be 4 lakh rupees. So, you will have to pay a small interest on the funded amount, which is your 3 lakh rupees. And hence, your margin here is the cash that you bring will be 1 lakh rupees. Throughout this presentation, we will be using these terms. 1 lakh rupees will be the margin that you will bring to the table, and which will be either through cash or collateral. We will later discover in this presentation how collateral can be used here. So first, let's keep it only to cash. Will be cash component will be the margin that you will bring, then your funded amount, and then cash margin plus your funded amount will be equal to your total investment. And throughout this presentation, we will be using a simple example of margin of 1 lakh rupees, your funded amount of 3 lakh rupees, and total investment will be 4 lakh rupees. So I want to tell you that the rise of MTF in India. So if from our sources, CNBC and ET, so I can tell you that MTF is the trend of MTF is increasingly being adopted in India by the investors, and on the as per NSE's website. So we have a total of 1.43 lakh crore of funded, which is outstanding on pan India basis. So I would like to show you the report on NSE's website. So as you can see, I am opening I'm downloading the MTF file from NSE's website right in front of you all. So if I just show you what this report, and what all you can gauge from here. So as you can see, this is the net script price outstanding at the end of the day, which you can see here. And this amount is in lakhs. I will divide this by 100. So I will get here 1.43 lakhs approximately. This is the net script price outstanding at the end of the day as on 21st August. So you can refer to the NSE's website for such MTF reports. And when you apply, so there is also data pertaining to the stocks also over here. So this is first is the symbol name, and then there's the stock name. Then we have the quantity which is financed, and which is basically the number of shares, and the amount which is financed against that particular stock. So I set it from descending to ascending. So you can see the top stocks here in the order of the funded amount. You can also apply this filter or the quantity being financed. So you can see that scriptoid what is outstanding at the beginning of the day, what is the fresh exposure which has been taken during the day, what is the exposure which is liquidated, and then what is finally the outstanding at the end of the day. So you can do analysis with this report. Coming back to our presentation, so this is about the rise of MTF in India and the trend of MTF in India. So you can also track this. Now let's understand MTF. So basically, as I said, MTF, it enhances your buying power. So if you have some margin, let's say 1 lakh rupees, so you will get 4x leverage, which means additional 3 lakhs of buying power, of course, subject to the stock that you are choosing, and the total investment will be up to 4 times. And in this case, we are assuming it to be 4 lakh rupees. So how you will get the funding, and then on the funded amount, you will have to pay 1% interest per month. You can hold your empty positions for up to T plus 999 trading days. There is an auto pledge and unpledge which happens. We have 1100 plus eligible scripts for MTF, and you also have the option to convert to delivery. So now we will deep dive into each one of these features of MTF. First one, buy up to 4x the price of one. So what happens is when you choose to buy a stock, let's say you go to the order pad and let's say choose a stock XYZ, and then you feel that you would want to invest 4 lakh rupees in this stock, but you see you only have 1 lakh rupees. So on the MTF order pad, you just have to enable one tick. No long lengthy paperworks, nothing. You just have to enable one tick, and then we will tell you the amount of funding that can be disbursed against that 1 lakh against that particular stock. So hence immediately the funds are provided to you, and you can uh, invest up to 4x. For example, in this example, if you see, 1 lakh is the margin that you bring, and then rupees 3 lakhs is the funded value, and your total investment is 4 lakh rupees. So you need not have full 4 lakh rupees of cash in hand to invest 4 lakhs. You just need a fraction of it, that is 1 lakh rupees, and up to 3 lakhs rupees against that 1 lakh will be funded. This can increase to 10 lakhs plus 30 lakhs is equal to 40 lakhs. This can increase to 1 crore plus 3 crores is equal to 4 crore. 10 crores plus 30 crores is equal to 40 crores. So we can, you can keep on increasing the funded value as per your margin for your whatever your investment goal is. Now, coming to the interest part, the interest that we charge on the funded amount is only 1% per month, which translates to 0.032% per day. So, if you can see, if you borrow rupees 3 lakhs from HDFC Sky, so the interest that you will have to pay will be just rupees 96 per day interest, which is less than 100 rupees for a funded amount of 3 lakhs. I repeat, your interest will be less than 100 rupees for an amount of 3 lakhs. For the fund, if the funded amount is 3 lakhs, so your daily interest will be 96 rupees, less than even 100 rupees for a funded amount of 3 lakhs. Now coming to the holding period. So what happens is, when you take an empty position, let's say you buy a stock XYZ and you want to invest 4 lakh rupees, but since you just have 1 lakh rupees as cash, so now your total, but you bought the stock with MTF, so you availed 3 lakh rupees as funding from us. So your total investment now stands to 4 lakhs. Now, for how long will we be able to provide you the funding? That will be for 999 trading days. That is more than 2 years already. Okay. So for this, you can for this period, this is a sufficient period for you to make your decisions whether you want to exit, whether you want to continue. So it is a huge time provided to you to decide and to maintain your positions. So the maximum is for which you can get the funding, use the funding, is 999 trading days. Now, coming to the auto pledge and unpledge, what happens is when you take an empty positions, your the stock for which you are availing the funding is marked as pledged, is marked as auto pledge by SEBI as per SEBI guidelines. And when you sell the stock for which you had taken empty position, it will be marked as unpledged. That particular stock will be marked as unpledged as per SEBI guidelines. So now this process is in sync with the SEBI guidelines, and this is an automated process. So no action is required from your end. So whenever you are buying an MTF stock, automatically it will be marked pledge. Whenever you are selling a stock bought with MTF, so automatically it will be marked unpledged. You do not need to perform any action at your end, and there is a minimum rupees 20 charge each side for pledge and unpledge. No need for any manual action. Now, as I said, that we provide you the funding for up to T plus 999 trading days, but you also have the option for conversion to delivery. Now, for example, a woman, she had only 1 lakh rupees in hand, let's say on the 20th of any month, and she availed the funding of 3 lakhs, and so her total investment stood up to 4 lakh rupees. Now, what happened is after 10 days, she got her salary, let's say, or she got the money by anyway. So now she does not want to avail the funding any longer, but she also doesn't want to sell her stocks. So what she does is she adds the 3 lakhs rupees. She adds the 3 lakh rupees, the funded amount that she had taken. So now her investment is not squared off. Her investment maintains as 4 lakhs, and the she stops paying interest thereafter the day she adds the funding. So since she availed the funding from 20th to 30th of that month, so the interest will be charged only from 20th to 30th. Now let's say she sold the stocks after converting to delivery with let's say on 30th July, assuming on 30th July she sold this she converted a position to delivery, and on 10th August, she decided to sell the stocks. So from 20th July to 30th July, she paid the interest. 30th July to 10th August, she did not pay the interest because she added the funded amount herself. So that is what happens on the T plus triple ninth trading day. So, for instance, if you do not want to sell the stocks, it's triple ninth trading day, and you do not want to sell the stock. Okay, so but you cannot also avail the funding any longer. So what you have to do in that case is you have to add the funding on yourself. So you have to convert your position to delivery. You have to arrange the funds uh, for the investment to be carried on, and hence your position will not be auto squared off. So in case it is the triple ninth trading day and you are availing the funds from us, you have not brought in your funds, so your position will be auto squared off by the risk team. And this practice is followed across brokers for whatever holding periods the respective brokers provide. So now, if you want to add the funds, you on the triple nine trading day, you simply have to go for the conversion to delivery option. Now, uh, let's see the impact of MTF on your investments. This is a very important part of this presentation. And now we will consider different scenarios, bearish and bullish market scenarios, so that you can decide whether MTF works for you or not. For which investment of yours does MTF work or not? So now let's say we are assuming that you have a total available capital of rupees 1000 and the buying price of a stock is rupees 100. So let's say you choose to invest without MTF. So first we are taking up the profit scenario, that the profit case, that the market goes up, the stock price goes up. So let's say you have 1000 rupees of available capital. There is a stock with the buying price of rupees 100. So of course, with 1000 rupees and the stock buying price is rupees 100, so you buy 10 shares of the stock. Now let's say the stock price rises from rupees 100 to 125. So now the total selling price of the 10 stocks will be 1250 rupees. And now here you will of course experience a gross profit 25 rupees per stock. You have 10 stocks. So 25 into 10 will be a 250 rupees will be a gross profit. Now let's say you buy the stock with MTF. Let's say you have 1000 rupees as your total available capital and you availed a funding of rupees 3000 with MTF. So now your total investment stands to rupees 4000 rupees. Now with 4000 rupees you bought 40 stocks. Okay. So now the stock price rises from 100 to 125. So there is a profit of rupees 25 per share. So now you have 40 shares. So now your total selling price becomes 40 into 125 is equal to 5000. And your total buying power was 4000. So now your gross profit here will be 5000 minus 1000, 5000 minus 4000, which will be equal to 1000. So in the first case, your gross profit was rupees 250. In the second case, your gross profit was rupees 100. So 4 times the profit. Now, coming to a scenario when the stock price falls lower than the price of the buying price. So let's assume in the previous case we assume the stock price rises from rupees 100 to rupees 125. Now we will assume that the stock price falls from rupees 100 to rupees 75 only. So now, in the first case, again we have rupees 1000 as the capital, as the total available capital. The buying price is rupees 100. So in the first case, without using MTF, you buy 10 shares, and the total selling price becomes 750. So your gross profit will be minus 250 rupees, which is a 250 rupees loss that you're facing. Now, considering you had availed MTF funding also here, that your total available capital is rupees 1000, and with MTF you availed a funding of rupees 3000. So now your total buying power has become equal to rupees 4000. You have 40 stocks for 4000. Now the stock price falls, 75 into 40 is equal to 3000 becomes your total selling price. And here the gross profit is minus 1000, means a loss of 1000. So here your loss is also multiplied by 4 times. So MTF, of course, it offers leverage, but it also comes with responsibility. It can amplify losses as well. So it should be used very smartly and with awareness. So if you know that a stock where you believe that it can make a profit of, or it can give you a return of, let's say at least 2% per month, so then is something you can consider amplifying your buying power with MTF. So you can to decide whether to choose an investment with MTF or without MTF. Please visit the all new MTF calculator on the HDFC Sky application. So go to the MTF dashboard and you will find the MTF calculator. Select a stock of your choice. Enter the expected price, the last traded price or the LTP, which will be auto populated. Okay, and then you can enter the expected price what you feel it will go up to, and then the holding periods, that for how long you wish to hold the stock, or how long you wish to hold because you think it will reach a certain expected price at this much given interval of time. So then you will choose how much money you want to invest in that. So once you've done all the calculations, once you've entered all the fields, please click on calculate, and then it will show you the investment with MTF, without MTF, and also the breakup of the charges that is involved. So you can decide. Sometimes it is profitable to invest using MTF even after paying off your interest and charges. For example, in this example of TCS that I have taken, uh, so the last traded price here was 3240 rupees, and the expected price which I have entered is 3500 rupees, and I choose to invest 1 lakh. So without MTF, when I invest using 1 lakh, the returns is 7.7%, and the profit is 7770 rupees, and the charges are rupees 271. So when I invest with MTF, I take an additional fund of close to 3 lakhs, and the total investment stands to approximately 4 lakhs. The quantity of shares bought is 123 against 30, and you can see the profit 31,000 profit, and the interest and charges are close to 2,000. But even after um, the interest part is removed from the profits, 32,000 minus 2,000 approximately, it is 30,000 approximately. It is still greater than the scenario where we are investing without MTF. So you can do different combinations. It will not always be like this scenario will not happen always, but you can check for your different scenarios for a price. If the expected price is higher than the LTP, or the expected price is lower than the LTP, for what is your holding period estimate, what is the amount that you're willing to invest. So you can do many permutations, combination basis, this decide doing. You can calculate, see for yourself. We are very transparent about the charges, so this can help you decide basis your risk appetite also. So now coming to the all new smart order pad. So if you can see our previous order pad, so I've selected one stock ITC. So it shows the margin that I have, and the quantity, the shares that I would want to buy in, and then of course when I enter the price, the quantity, and then I'm asked to review the buy order. On the right hand side, when we see the smart order pad, so if you can see here that this customer intends to buy 8 shares of ITC, but the available funds are not sufficient, if you can see. So in that case, we give an option, the customer gets an option to buy the shares using MTF, so that the person performs the trade and does not have to switch the back button because of lack of funds. Instant buying power is available. So, total the interest and the charges. So, we charge only 1% interest per month on the funded amount, and you can hold your positions for up to T plus triple line trading days, and the interest will be charged accordingly. Auto pledged and unpledged, rupees 40 total, and other brokerage and transaction charges apply as usual, and this is one of the lowest in the industry. How to place an empty order on Sky? It's very easy. You can use the all new smart order pad. Also, if you would like to go, another way, you can select a stock of your choice, and then you can toggle to the MTF tab. You can click on buy with MTF, and then you can review the charges, the your margin, the funding amount that you have taken. Click on swipe for instant buy, and your order will be successfully placed. It's very easy, it's hardly a two-step process. So if you need help in picking stocks, or how you feel how should you start with MTF, so HDFC Sky offers a dedicated MTF research section where we provide curated stock recommendations. Target price expectations are there. We suggest timelines, also stop loss per stock. There is a dedicated report available here by our SEBI registered professionals, which you can see for yourself, and you can see the when what was the recommendation date of that particular stock. You can see what is the last traded price. You can see how much is the funding available. You can see what is the target price of that particular stock, and what is the duration which we recommend, that by when will the stock reach its target price. And we, based on your different investment goals and risk appetites, we have our research section divided into three components: short term, mid term, and long term. And you can choose from yourself where would you like to go. If you're not confident about MTF, you can start small as per your risk appetite and your available capital, maybe with as small as rupees 1000, 2000, 5000. So it's just like placing an equity order but taking a funding with MTF. It is very simple. So now, what is margin pledge and how to use it with MTF? So when you invest in stocks, you usually need full cash to buy them. So, but as in the beginning of this presentation, as we discussed, that we will be considering the example of 4 lakh investment rupees throughout. So 1 lakh will be your margin, 3 lakhs will be your funded amount, and 4 lakh will be your total investment. As I said, that 1 lakh will be the cash that you bring to the table. What if you do not even want to bring the 1 lakh cash from your pocket? What if you already have an equity portfolio, by pledging which you can unlock rupees 1 lakh as margin by using the stocks as collateral? Let's see how. So margin pledge is a process where you pledge your existing stocks in exchange for margin. The margin can be used to take new empty positions in the market without selling your holdings. The stocks remain in your portfolio, but they are marked as pledge. In short, you unlock liquidity from your portfolio while still retaining ownership of your investments. So for margin pledge funding also, 1% monthly interest is charged only on the funded amount and only for the duration for which the funding is used. Let's again take the same example. Let's say on 20th July, you pledge your stocks and unlock funding worth rupees 1 lakh. But you put that funding to use from 25th July to 30th July only. So you will be charged interest from 25th July to 30th July only. From 20th to 25th July, although you had unlocked the funding, but we will not charge any interest on that. And even after pledging, you continue to receive dividends if they are declared on your pledged stocks. So, how do you pledge on HDFC Sky? So, first you go to the home page, and from there you can click on margin pledge in the tools section. You will see how much is the eligible margin against your holdings. Click on pledge now. you will have a list of stocks, and you will see the available margin that you can unlock from different stocks. So you want to select all the stocks, few stocks, or only one stocks. That's up to you to decide. Once you select a stock, so then you have to click on continue to pledge, and your instant funding will be available for your uh, you have to click on continue to pledge, and you have to enter OTP on the CDSL website. Will be redirected to the CDSL website, and you have to enter the OTP for that particular stock. And in the margin pledge section, in the pledge tab, so you will get details of uh, uh, how many stocks of yours have been pledged and how much margin have you unlocked. So, how margin pledge works with MTF? So, now MTF, as we said, lets you buy stocks by paying only a part of the amount upfront, while HDFC Sky funds the rest and you pay interest on the funded amount. Now, how do you combine margin pledge with MTF? As I said, margin. There are two ways to bring margin. One is you bring cash from your pocket, and the another way is funding by you pledge your existing portfolio. Your portfolio acts as a collateral. You pledge it and you unlock the margin. Please remember that while portfolio pledging, it gives you a funding, but it will be treated as margin only. And to use the margin, you will have to bring in the funding via MTF, which will be equal to total investment amount. So let's say you have an equity portfolio of rupees 1.5 lakhs. Now, there is a haircut of 50,000 rupees, which is implied on your investment of rupees 1 lakh, 1.5 lakhs, and you unlock the margin of rupees 1 lakh. So, what you done is you have an equity portfolio of 1.5 lakh rupees, and then you have pledged those 1.5 lakh rupees. Uh, you have pledged your 1.5 lakh rupees equity investment, and then you have unlocked rupees 1 lakh as margin. So now we will add then you choose to invest the funding with you choose to complete the investment with MTF. So now rupees 3 lakh is funded via MTF, and then your total investment stands to rupees 4 lakh. So what happened is your 1.5 lakh worth of portfolio, you pledged it, unlocked 1 lakh rupees as margin, and you bought another 3 lakhs with MTF, and your total investment is 4 lakhs. But remember, you did not sell your portfolio worth of rupees 1.5 lakh. So now actually your total investment stands to rupees 5.5 lakhs with just 1.5 lakhs of cash. Interesting, isn't it? So now, why HDFC Sky? So this is backed by the trust and stability of HDFC. We have a dedicated MTF research section with stock insights, and as you can see, our pledge process, our MTF order pad journeys, they're very seamless throughout. Very few clicks and very smooth and hassle free. So please stay updated with the MTF research section. We have stock insights, say we dedicated reports over there. We have time proper horizons are mentioned as per your investment goals, so you can choose to make use of that. And if you are worried, if you're still worried, then you can choose to start small and later enhance as you gain confidence and as you feel comfortable. So MTF isn't just about funding, it's about strategic investing. Whether markets go up and down, understanding how MTF works can help you take better decisions. So explore the MTF eligible stocks on HDFC Sky and the price of those stocks if you choose to buy them using MTF. So keep yourself updated with the MTF dedicated MTF research section. Thank you so much. Ravi, do we have any questions?
can't see any comments, any questions.
Okay,
We can end the webinar.
sure. If you have any questions, please feel free to reach out to our Sky Support portal and we'll be happy to assist you. Thank you so much.